Hi there, my name is Tim Freund. I am a real estate broker out of Southern California. I am coming to you from my recording studio near Westlake Village, California, which is where I'm based. So I work, for those of you unfamiliar with the area, that's midway between LA and Santa Barbara, and I basically work Los Angeles and Ventura counties. So this is my first video podcast. I'm doing both, recording it for the pod and also doing a video. And the reason for that is that I wanted to kind of connect with you here and talk about what's going on in the market right now, because it's a white-hot, crazy real estate market. And one of the questions I get asked all the time is, well, when's the bubble going to burst? When are we going to see the foreclosures? When are we going to see this craziness end? And so I wanted to kind of talk a little bit about that and see if I can address and ease some concerns and maybe perhaps raise some others. So the first thing you need to know is basic economics 101. And economics 101 is supply and demand. And our situation right now is that the demand is greatly exceeding the supply of homes. Pretty straightforward, pretty simple. There's too many buyers and there's not enough housing. So why is that? Well, there's a lot of reasons. Where to start? Let's start with the millennials. Okay, so the millennials now are over 40% of the buyer pool. The millennials are the largest demographic generation on record. They're bigger than the baby boomers. A lot of people don't realize that. Bigger than baby boomers. There's a lot of millennials. The oldest millennials are just turning 40. So it's 1981. I believe it's till 1995. Or 96. 25-year span. So that is the millennial generation, and they are just turning 40. So they're moving into their peak earning years, and many of them are just starting to actually start household formation. They did things a lot later. We remember a decade ago, people were living in their parents' basement, and they weren't getting married right away. They were starting their careers. Women were doing more careers and starting families later. I mean, all that's true. And so what we're seeing in reality now is that these folks are starting to buy homes. You folks are buying homes. If you're listening to my podcast, you're those folks. I mean, almost certainly. So that's a big deal because there's a lot of millennials. There's a lot of you buying houses. While this is simultaneously happening, we have seniors who are not selling houses. Seniors are aging in place. That's what it's called when instead of going into a retirement community or an age-restricted community or moving down to a one-story or going into assisted care facility, we're finding that the seniors are rather staying in place, staying as long as they can stay. Now, some economically are going to make moves into their 80s, and that's kind of when we start to see some people sell their houses. But that's not traditionally how it used to be. And so these seniors who are aging, their homes aren't on the market. That affects supply. It makes supply tight. You also have a shortage of housing. I mean, just a shortage of housing. I mean, let's face it. The population is not getting smaller, right? Global population is not getting smaller. United States population is not getting smaller. I mean, it may not be increasing at the pace it's increased in past years, but nonetheless, it's not getting smaller, right? Where are these people? Where are people supposed to live, right? If we're not building any houses, there's nothing new. Where are people going to move to? They're going to move to existing. Well, if existing isn't on the market, then they're going to go crazy for what is on the market. Now, why aren't they building? Of course, you see home builders, Lennar, you see all the big builders, Toll Brothers, they're building homes, right? Well, they are, to a degree, some areas more so than others. Certainly in California, you're not seeing a lot of people building. I mean, there's no land, right? There's hardly any land. The growth restrictions, I'm in Ventura County. The growth restrictions here are just ridiculous. And I'm an environmentalist. I'm a pretty liberal guy. Economically, not so much. But, philosophically, I'm pretty liberal. I want to protect the environment. I want my grandkids to have, places to hike and clean water to drink. But this is ridiculous because you can't even build in Ventura County. It's almost impossible to get any kind of new home construction done here. So where do people live? Where do they go? They have to buy up the existing pool of houses, which, as we've just discussed, is shrunk down because we have people who are not selling. Okay, I'm beating a dead horse. Builders aren't building. Why aren't builders building? Well, right now they're not building because the cost of lumber is shot through the roof and the cost of commodities and tile and cement are through the roof. Why? Well, The pandemic had a big part of it, right? This is 2021. For those of you who will see this 10 years from now, just kidding. It's, we're in the middle of a pandemic, and so although we're coming out of it, hopefully, for the last year, many industries have been disrupted, and they have been unable to do their basic jobs. People were out sick, they had to shut down, you had restrictions and social distancing. So lumber mills weren't making lumber. Cement factories weren't making cement. Nail companies weren't making nails. I mean, everything, right? The price of materials, raw materials has been going up because there's just a shortage and there's high demand. Builders want to build houses. People want to fix their homes up. They're buying all this stuff, driving the costs up. So then builders who are very sensitive to price changes, they can't just go jack up the price. The cost to build a home today is estimated, and this is in March of 2021, it is estimated that it is $24,000 more expensive to build a home just because of the cost of lumber. That's when you're talking about a $300,000 home or a $500,000 home, $24,000 per home, that's a lot of money. So what are the builders doing? Ooh, we're just going to slow it down a little bit, taking a load off, taking a break. Even though demand is crazy and they're selling way out in front. I sold new construction for 14 years. You release a certain number of homes. If you start to sell them all, you release more. I mean, that's like build and let's raise the price and build and raise the price. But that's, they can only do so much price raising. And so we just saw that the permits in March were down over 10%, 10.3% of new permits, the requests for new permits. Now, I don't need to tell you, if we're not getting permits, we're not building. I mean, you have to have permits, right? So if the permits are down 10% and the market's white hot, demand is through the roof, not much new supply to accommodate those folks. All right? So now we know we've got short supply with seniors. We've got all these millennials buying, right? We've got builders' costs rising exponentially, and so they're slowing down, right? Because they got to have their margins, and they can't pass that all on to the consumer. We have interest rates. Now, interest rates are really interesting right now because they've climbed. We're up retail probably about 0.5% from the lows, maybe even 5/8. And maybe by the end of this week, it'll be 3/4. I don't know. Rates are higher. They were down in the mid-2s. Now they're in the low 3s. Having no effect on demand, by the way. It is having an effect directly on the refinancing market, which could then in turn have an effect on people getting equity lines, and it could in turn have an effect on some of those commodity prices. But, we're talking, there's a ripple effect, right? We just dropped a pebble in the ocean over by Hawaii, and, we're waiting for the little wave to come our way that's going to reduce our prices, It's not going to happen anytime soon. So we have supply and demand issues. We have low rates, still historically low, in the low 3s. These are historically low rates. And as a result, people are wanting to buy homes. And of course, the issue of the pandemic, right? Pandemic has driven people out of multifamily housing, out of condominiums, and into single-family housing. They want a yard. They need more bedrooms. They need more space. Right? They're homeschooling. They're working from home a lot more, which has allowed people, because of the pandemic, working from home, they're able to move farther out. So that's creating demand pressures on the supply in farther out areas that maybe didn't experience that before. Now they are too. To give you a perspective, my son's going to be going off to Colorado School of Mines. That's what it is, Colorado School of Mines. And he's a young guy, but he's really watching his P's and Q's, and he. Sorry, a little bit of a technical issue there. He, in turn, wants to buy a house. Well, how's he going to do that, right? How's he going to buy a house? Sorry, it's just not working. How's he going to buy a house? He's got, 5% down, and he wants to go buy a house in Colorado, and they're getting outbid by 25% above ask over there. How's a first-time buyer supposed to buy a house? You have to talk about it discouraging. Even if you got the down payment, you can't. You're not even in the game because you're competing with people with cash. I just lost out on an offer, to give you an example, in West Los Angeles for a client that was priced at $1,388,000. Obviously, in hindsight, that was low, right? It seemed low at the time, but okay, whatever. It's not Beverly Hills, $1,388,000. It sold for $1,710,000. That's over $300,000 above the list price, the asking price. That's amazing. And we didn't get it, by the way. We got up to 1688. We didn't get it. We still went $300,000 over, and we still didn't get it. So there's a bit of a panic taking place, right? People are really concerned. They're not going to be able to buy a house. My son being just one example. I've got another buyer right now, same thing. They're like, Tim, if we don't get a home in the next 3 months, we're not going to be able to afford a home in 5 months because these things are appreciating. And we're seeing some crazy prices. So that means there's a bubble that's going to burst, right? Okay, maybe. Because we always know it's not a question of if there's going to be a correction, only a question of when, right? And how big is the correction going to be? And we saw a massive correction in 2008 to 2009 through 2012. Okay, massive correction. Why? Because we had bad loans. People that weren't qualified were buying houses. No business buying houses. Couldn't afford them. Couldn't get past the opening interest rate. They'd make the first payment, the interest rate would adjust. They call it the teaser rate, right? They would adjust. So they couldn't afford it, and then they go to foreclosure. And we ended up with all these properties. And what happened to all those properties, by the way, after the Great Recession? Well, about 2012, all of the major banks, Bank of America, who had bought Countrywide, for example, literally dumped 20 cents on the dollar, all of their bad loans and all of their bad foreclosures. And they were picked up by Blackstone. They were picked up by American Homes for Rent right here in our local community of Agoura Hills, largest residential property owner in the country. They turned a mom and pop business into a Wall Street business. And all those tens of thousands of homes that would maybe be on the market today, at least trading hands, some of them would be trading hands. None of them are trading hands because REITs have very strict rules, and so those homes are not selling. They're rentals. So what does that do? Constrict supply further. Oh, and by the way, back to the builders. I mean, this is all related. You go back to the builders and say, well, the builders aren't building. They're not building enough multifamily, not building enough single family. Consider this. Those tens of thousands of homes that Blackstone bought, for example, occupied. All of them. All of them. There are tenants in all of those homes. So you have to ask yourself, we have growing population. Let's just break it down. We have a growing population. We do not have enough houses to house those people. And if you haven't driven around Los Angeles to see the homeless situation here, you know it's a real situation. Sure, there's a lot of mental illness there. There's a lot of drug abuse and other situations. But there are normal, everyday people who cannot afford a house. They're living out of their car or they're living in a tent because they can't afford a place to live because there aren't any inexpensive places to live. And we're not building them. So the supply situation is just a mess. There's just not enough supply, and the demand is really, really hot. So what does that mean? When is that correction going to come? When is that bubble going to burst? Well, here's a prediction. When the recession comes. Oh, wait a minute. We're in a recession with the pandemic, or we're coming out of the recession. In fact, the Federal Reserve predicts that we will be at over 3% GDP. I think actually they said 6.5% by the end of the year. They're predicting a GDP of 6.5%. We haven't seen that since, Eisenhower? I mean, we haven't seen 6.5% GDP. I think in my lifetime, I could be wrong about that. I don't follow the GDP, but that's a high GDP. Well, we're coming out of this crush of the pandemic. So GDP and that's the exchange of goods and services. That's gross domestic product. It's how much we're selling, how much we're buying, how much we're producing, and it's going up, right? That's inflationary, right? Yeah, we're printing money you can. You just print it like water. It's free. Just print it. That's what the Treasury is doing, and that is inflationary. So where's the inflation? Well, we're seeing it in commodity prices, which is slowing down building. Oh, great. We're seeing it in home prices, which is making homes less affordable. They're all tied together. Are any of them going to lead to a recession? 6.5% GDP is not a recession. That's explosive growth. That's the exact opposite of recession. So as long as we have that kind of growth in the gross domestic product of the nation, all the goods and services we produce, do not expect housing to be the one that goes Not going to happen. It's just not going to happen. Interest rates. What's going to happen with interest rates, Tim? I mean, we're all over the place, right? I mean, we're GDP, we're housing, we're millennials, we're demographics, we're politics of growth. Interest rates. Everybody looks to interest rates. When interest rates rise, it makes the cost higher, it makes demand lessen. Okay, I buy that. Interest rates are up. As I said earlier, they're up 0.5%. They're still in the low threes. When I started selling homes in 1990, I know I don't look that old, but I am. When I started selling homes in 1990, interest rates were almost 12%, 11.5%. They're 3 1/4, 3 3/8, 3 1/4, 3 1/8, whatever. They're low, historically very low. There's a lot of slack there that interest rates can go up and prices can still continue to go up and maintain themselves. So we're not in a recession. There's not a recession coming. I mean, we're coming out of a recession, but it's our own sort of self-created recession because it was the pandemic. And now we've pumped all this money in to get us to go. And the Federal Reserve said, you know what? We're not raising rates. Maybe in 2022. So a year from now, maybe? I mean, how long can this white-hot real estate market go on? Guess what? A long time. There's legs on this horse, and this horse is going to run. So if you're a buyer, get a house. How are you going to do that? Not easy. If you have a low down payment, it's like my son, terribly difficult, really hard. You're competing with people with a lot more money. And for a lot of those people, you're going to have to adjust their expectations, and maybe they're just going to rent for a while and just going to have to wait it out. And that's, that's unfortunate, right? For those that want to buy, and then aren't able to because there's no inventory or they can't win the bid because there's a cash buyer. I mean, I just had another offer. Went out, home listed for $910. Nice home, nice view. Home was okay. It was kind of funky floor plan. It needed some updating, but it was okay. Flag lot. Not everybody likes flag lots. Price for $910,000 in a neighborhood that historically is like $750. So it's already high. And my client offered $950. Didn't get it. Somebody offered $1 million. Didn't get it. You want to know why? Because somebody came with all cash for $988, and they got it. I mean, even when you're the highest bid, you don't always get it because there's somebody out there with cash that's going to crush you. So it's very, very difficult to be a buyer right now. When you look at the price of a listing price of a home, that is not the sale price. In fact, I'm now sending listings to clients that say, hey, I'm up to $1 million. I'm sending them stuff that tops out at $910, $920. I don't send them $950 anymore because $950 is $1,050,000. Somebody looking at $1,750,000. There was a nice new house that came out at $1,700,000. I didn't even send it to them. Why? They can't afford it. It's going to go outside their price range, and it's just going to be frustrating for them. So your perspective has to be changed if you're a buyer. Now, if you're a seller, what are you going to do? First of all, you got to figure out where am I going to go. I mean, I got a list on my wall here of potential listings. In fact, in some cases, I actually have the listing. It's sitting in my folder, but they're not putting the house on the market because they really don't know where they're going to go. You got to figure out where you're going to go. Okay? If you have figured out where you're going to go, now you got to figure out how you can price your home. We're seeing these high prices. Does that mean you come out at like some really high price and you see what happens? Probably not, actually. Probably what you end up doing is, if you're sellers, you price it a little bit less, because if you price it too high and it doesn't sell, what does everybody say? There's something wrong with it. Home didn't sell in a day. There's something wrong with it. Didn't sell in 2 weeks. There's something wrong with it. What's wrong with it? And now what do I have to do? How far do I have to cut my price before people start to look at it again and aren't thinking there's something wrong with it? So they're pricing them lower, and then they're getting bid up. And that sort of creates this sort of natural water finds its own level kind of thing, where a bunch of people are going to bid it, and whatever that high bid is what it's going to be. One thing to keep in mind as a buyer, when you're making an offer, you're negotiating price and you're negotiating terms. Terms are, when do I close? How much am I putting down? Well, we talked about that a little bit. What am I going to close? When am I going to give up possession? Or when am I going to get possession? If a seller doesn't have a place to go, Are they going to be maybe interested in your offer because you said, hey, you can rent my house back, your house that I'm buying from you, you can rent it back from me for $1. 2 months. Take 60 days. Find a house I'll rent it to for $1. Take my offer. That's what's happening. Literally, that's literally what that happened to me. One of my listings. Somebody offered us more money than an all-cash offer and said you can have your house for 60 days for $1. Guess which offer my client took? The higher one with the 60 days rent back. It was like a $30,000 delta between the two. So it's an intense marketplace. What are the solutions? When is it going to break? I don't have an answer. I do know this. There's going to be a correction. We know there's going to be a correction because there's always a correction. Is it going to be like 2008, 9? No, it's not, because we don't have people that can't qualify. In fact, everybody out there can qualify. If you buy a house and it drops by 15%, okay, so it doesn't matter if you're not selling it, right? It doesn't matter. It can drop by 30%, just like it did in the Great Recession, which I don't think is going to happen. It doesn't matter. As long as you can afford the payment, you got to live somewhere. You got a 3.25% interest rate. You know, where are you going to go? So, and you put a down payment in. So you may not even be upside down. You may just have lost, your equity, but you're still paying down the mortgage. 30 years you're going to own that house. Don't have any answers for you. I guess want to end on this. Pressure your politicians to ease up building. We need to get more construction. We really do. I mean, our area is acute. It's a terrible situation. But it's this way everywhere. And, stay after it. Don't give up. Keep writing offers. Just recognize that you're going to have to come in aggressive. You're going to have to come in higher than you want. The asking price is not the sale price. It's the manufacturer's suggested retail price. It's going to go out higher because there are more people that want that commodity, a home, than there are people who don't. My name is Tim Freund. I am a real estate broker. I sell houses along the Ventura County and LA County line. Reach out to me, DM me, find me on social, come to my website, thousandrocksrealestate.com. You can find my podcast and other things on therealestateconversation.com. Happy to share any advice. Whew. It's my first video podcast. Thanks for tuning in. I really do appreciate it, and I will look forward to the next time. Thanks so much. Bye now.